Hello, today is Sunday. It is the 16th of September 2012. Quick look at the US Dixie, the fiat currency index. Support has not been found where it's supposed to. And just because I would say it's supposed to doesn't mean it was supposed to. Rather, because you did not find support in an area you usually do, managed to continue to go lower. Therefore, this area, which last week was an area you would expect to be support, this week you would expect that to be that of resistance. Now let's look at these dates. This started going higher, well, right near the end of April of last year, after it was down to 72. What did gold and silver, mainly silver, do from point A up to point B? So where were we before this time frame? Okay, well, let's take a look at this on a 35-day chart. This takes us back to a key high. This was the last significant break high at 120 at the start of the decade. And obviously, 2 hits at the significant level, not looking good. Well, what I want to do now is go back to what the long-term chart looked like when it did reach this high of 121.02. So let's do that now. Let's go back to 2001 and on the date of July the 6th. This is what the high was. Obviously, there was a high even before then. Yeah, this was from just a little after 1980 to like 85. What did silver do? Yeah, it went from about 50 down to about 6. It didn't do so well. And then what did it do from here to here? Yeah, it went up about 6%. Yeah, so it lost 80%, then it gained 60. But let's look at the chart based on chart analysis is concerned. It got above this first Fibonacci level, and it's looking as if it was a gimme that it was going to test the area of 124. It obviously did not do that. Now, what I'd be saying now is that it's extremely important for the level of 104.05 to hold. If it doesn't, and it can stay and hold below it for quite some time, then that means not only was this down move not a failure, but the trend is going to continue. So by looking at this on the 2-month time frame, I've only got one Fibonacci line on here because I'm using the high of 164.72 and the same lows of 78.33. Well, the 105 area, first of all, had very little support. I said that level would have had to hold because that's the way Fibonacci analysis works, and then boom, it crushes through, keeping the bear market in play. If we put a line right around 78.33 in that ballpark area, which is pretty much where we are now. Okay, so you didn't hold this level, and you come back down to here, and it's been bouncing back and forth. This is extremely weak. And I would be extremely surprised if we do not test significantly lower levels fairly soon, because this is a sign of markets correcting sideways through time. Now, what kind of duration will it go down to? Or what kind of price, number, 60, 58, 62? I don't know, but this is definitely not a bullish looking chart, and it's quite the opposite. Thank you for tuning in.